Welcome back. Getting into the last couple of minutes of trade this afternoon, and the market continues to be extremely range-bound, at least for the time being.
Rajen, hi, afternoon. Thanks for joining in. We have Infosys numbers tomorrow. How are you positioned in that stock ahead of earnings?
Well, Sonia, I think we give a lot of importance to Infosys, I mean, they would be guiding for 7%, 9%, but the kind of coverage Infosys gets is enormous actually. So I think for me, it's come down to senior levels, trading at reasonable P multiple. And if you have got a long time frame of 3-4 years, then only you can make up money. Infosys is not a stock wherein you could make money in the next 6 months because of uncertainties and all that. But yes, if your time frame is about 3 years and all that, I think you can end up making more than market returns.
I take your point. I take your point because yeah, we haven't seen Infosys. In fact, we were just discussing how Infosys has become a wealth destructor over the last many years rather than a wealth creator. So then, let's talk about some other stocks, because you have been very bullish in spaces like auto ancillaries, etc. And mid caps looks like there's a lot of potential if you get, of course, if you get your stock right. What are you recommending investors to buy now?
Well, we have recommended a number of ideas on our channel over the past 3 months. Mahindra Lifespace, which is doing well, which we had recommended on the day of budget, talking about government going all out for affordable housing, and I think that sector has been given infra status. In fact, on this Sunday, the Prime Minister's office also had a meeting with 30 builders across the country on how to make affordable housing a big success. So, and what way both the government and the private sector can get together to make this big hit. So I think affordable housing is one space which we believe should do very well. Mahindra Lifespace is our bet over there. And even at the current price of 410 rupees, which is ex-rights actually, the stock is looking attractive. Then we have hotel industry, which I think should do very well. There is a company called Oriental Hotels, which is trading at about, I think 38 rupees. Got about 50% clear upside. This company is trading at a market cap of 700 crores, and the value of one of its property, Taj Coromandel, which is at Chennai, is about 750 crores. You are getting the rest 9 hotels which it is managing in south of India for absolutely free. Plus they have 65 crore of investment in St. James Court property, which is near the Buckingham Palace in London. So this kind of, there are plenty of ideas. The market is flooded with opportunities right now.
So give us that one opportunity, Rajen. So give us that one opportunity on the Nifty 50 as well. Maybe the 1 or 2 odd companies where you think will actually perhaps get a pleasant earnings surprise, and therefore there might be a bit of a run.
You would like it from the frontline space, Nifty 50, right? That's what you asked, right?
Yeah.
Hello. I think Reliance is the idea which we shared with you, and we said that this year would be the year of Reliance. The stock has moved up from almost 1,000 to 1,400 levels. It's taking a breather. When you're running a marathon, you got to run at a same speed. Otherwise, if you run too fast, you get tired, and you basically take a breather. And that's what Reliance has done actually. It has run up too fast, 40% upside in about 4 months. That's really too much for a company of this market cap. So I think it's taking a breather, but once after some time frame, I think again it will start its up move, because I think still it is the cheapest frontline stock in the country right now.